YYC Group was established in 1974, founded by Mr. Yap Siong Fat and his wife. Initially, our office was located at Pudu, Kuala Lumpur. In early 2018, YYC HQ officially relocated to a 5-story building, having more than 800 employees. Currently, YYC operates with branches across KL, Selangor, Johor, and Penang. In 2019, they have also entered the Singapore market. YYC's business philosophy and excellent performance successfully catch the attention of OCBC Bank to invest and become the strategic partner.
为了把 YYC 推上另外一个高峰，我选择不再守，而是转型。对我来讲，转型就是不断的学习，不断的创新，带更好的元素进来自己的公司，然后把公司做得更好、更强。
YYC Group providing one-stop solution of professional services including accounting, tax, audit, business school, business advisory, etc. Through innovative transformation, we have trained more than 100,000 business owners and widely recognized by entrepreneurs from many industries. Today, YYC has over 20,000 clients.
YYC 不是只是一个会计公司，我们是一个企业医生。Your success is our success.
Yes, you can.
It's mid of 2021 and you know what that means. It's time to prepare transfer pricing documentations for a year that was severely impacted by COVID-19. Now, this is a task that many SMEs are dreading, as there will be lots of questions surrounding documentation losses, restructuring, government assistance in terms of arm's length transfer pricing. Welcome everyone, I am Amanda Andrea, your host for the second episode of the Tax Made Easy talk show. In today's episode, we're going to talk about the myths and facts about transfer pricing. Today's show is really special because we have 3 outstanding transfer pricing experts with us. Now let's welcome our main speaker, Zen Chow from YYC.
All right, very good afternoon, everyone, and welcome again to Tax Made Easy. So today we're going to talk about transfer pricing. Of course, let me just introduce myself. I'm Zen. Yeah, I think those that have actually watched the previous episode have probably seen me, but those that have just joined us for this episode, well, just let me tell you, I'm Zen Chow. I'm the Executive Director of YYC Group, as well as the Head of Tax in YYC Group. Well, today I'm going to share with you, more about the myths and facts about transfer pricing. Now, a lot of people will actually see me for the very first time would say, "Hey, Zen, you look pretty young. No, are you sure? You are the director of YYC Group?" Now, the fact is that I'm actually not young, right? To be honest, because I've been in this industry for more than 15 years. Yeah, doing all sorts of taxes, be it income tax, RPGT, stamp duty, SST, or even the GST last time. Yeah, of course, I hold the license, the tax agent license issued by the Ministry of Finance, as well as, when the GST was introduced last time, I was also, the GST agent license. Yeah. And today, before we even start, I have a question. I have a question for everyone that is actually viewing to this episode. And I need to know if what is the response from all the participants today on this question. So I'll just put up this question. Yeah, there was this question for everyone to look at. Now, just select which one do you think is your answer, and we will talk about this results later. Yeah. So do you think transfer pricing is important? Yeah. Select your answer. We're gonna talk about that later. All right. So back to you, Amanda.
Thank you very much. So Zen basically has also found the fountain of youth. Basically, that's because he's so young looking. Now, alongside Zen Chow representing a perspective from the government, we have Dr. Esther from the Inland Revenue Board of Malaysia, or famously known as LHDNN. And finally, we also have Haikal Uzair, the head of transfer pricing from FGV Group. Thank you both for joining us. We're excited to have all of you here. And before we actually get right into the topics, can we know a little bit more about both of you? I'd like to start with Dr. Esther. Can you tell us how you got into tax or transfer pricing?
Hello, everyone. Good afternoon. And thank you for inviting me today, Malaysiakini. And Yeah, my name is Esther A.P. Koisin. If you are wondering what that AP stand for, it's not anak perempuan. That is my father's name, Anthony Pipin. So my full name, official name is Esther Anthony Pipin Koisin. I work for the Inland Revenue Board of Malaysia for more than 30 years. So I probably do not fit into the young category like Zen, but hopefully among the young people today, I can feel young again. And I've been involved with international taxation for half of my working years. And I am the director of the Department of International Taxation, who is responsible for transfer pricing policy. We are also deal with treaty matters, APA, MAP, exchange of information, and whole lots involving international taxation. But for transfer pricing, it does not just involve international transactions, but there are issues of domestic transfer pricing. Thank you.
Thank you very much, Dr. Esther. Now, how about you, Faisal? Tell us, how did this become your career?
Thank you, Amanda, and thanks, Malaysiakini, for inviting me. I did not choose the career. I definitely did not choose transfer pricing. I did know that I wanted to go into tax, and I remember the first day me joining. I started off my career with the Big Four, with PwC, and when I was doing my application, I did mention I wanted to do tax. When you talk about tax, you naturally thinking about doing your income tax, your Form C, or your regular submission that you need to do at the end of March or April and so on, as well as SST or GST previously. But you never heard about transfer pricing. At least I never heard about it. So I joined in PwC as a consultant for the transfer pricing team. They put me there, and it was an interesting journey. I serviced a few clients, different industry, different organization, different groups. And transfer pricing, whilst it has a generic principle to it, it applies differently in different industry. And I was gracious and I was lucky enough to be given that opportunity for that exposure. And after a few years on the consulting side, I joined in-house with formerly British Petroleum, now they're known as BP. I was part of their global transfer pricing team. And after a few years there as well, I was recruited to be the head of transfer pricing for FGV, where I am right now.
All right, thank you very much. And of course, thank you very much, Mr. Haikal. Apologies, I actually mentioned the wrong name just now. I was too excited. Now, ladies and gentlemen, before we jump right in, I actually have a question for all the panelists. Can any of you, well, actually, each and every one of you will have to tell me, what are some of the wrong perceptions that SMEs have towards the Malaysian transfer pricing compliance requirements? Can we please start off with Zen?
All right, thank you, Amanda. Well, I would say the biggest misconception that SMEs especially have onto transfer pricing is that, to a lot of SMEs out there, they would always say that, hey, when I have transactions with my related companies, with my related parties, well, I decide what price I should charge. I can decide whatever price I should charge. I can charge, higher than the rest. I can charge lower than the rest because they are all my companies anyway. They are all in my same group. So why should I, actually follow a pricing that is being made out there? Why should I use the market price? I can always charge the price that I want. But that is like a big mistake. That is definitely a big mistake, because the whole concept of transfer pricing is you should always charge the arm's length price, which in other words, the market price. You do not actually have your own control to charge whatever price you want to, especially if it deviates from the arm's length price by a lot. Yeah, so that would be the biggest misconception that SMEs have. Yeah, so that's why today we're going to talk about transfer pricing, and we're going to tell you more, how you should actually determine your pricing. Yep, that's from my side.
Fantastic, thank you, Zen. And how about you, Haikal? What do you think are some of the wrong perceptions that SMEs have towards this topic?
To add on from what Zan mentioned, I think if we're looking from the flavor of SMEs, they'll probably be seeing that why does transfer pricing applies to me? The common notions that we always have is that if you're talking about inter-jurisdiction transaction, you will be thinking about gigantic companies, Fortune 100 companies, and me being SME, why does it apply to me? We are only talking about those listed companies, those companies making billions in transactions. So me being an SME, why do I need to comply with this transfer pricing requirement? So that could be one of the wrong perception, I guess, where we're talking about SME and the compliance on the transfer pricing compliance. And then the other one where there could be SME feeling this is SME if they are in the context of operating locally in Malaysia only. There could be a view that I'm only operating in Malaysia. Why do I need to care about this transfer pricing compliance requirement? I'm not transacting overseas. And that could be also another misconception about what is the requirement about transfer pricing. I'm sure we'll get into it later on through this show. But in my view, those are the two key misconceptions.
Okay, thank you very much, Haikal. Now, we already have some questions. Fantastic, but we'll get to that later on. Dr. Esther, can you give us some input on what you think some of the wrong perceptions SMEs have?
Zen and Haikal have actually mentioned those misconceptions correctly. And on our perspective, we would like to correct that perspective and to inform our SMEs that, well, each of these control transactions, they are involving, although they are interrelated companies, but they are actually different legal entity, so that the transactions, for the transactions to be looked into for tax purposes, we have to see what is the actual market forces that determines actually the transfer of those services and tangible properties. So that's the misconception. Although they think that these companies belongs to themselves, probably because it belongs to, okay, I have so many companies and I am the director. Basically, these are all my companies, so why should I be concerned of the transfer price? But as I said, they are all different legal entities, so they should be recording the proper sales, arm's length sales, and not merely putting a price which is not arm's length. So we hope that this session can address those issues.
I hope so too. Ladies and gentlemen, we are going to dive right into some very, very important questions, and I really hope that all of you feel free to actually talk to us. I'm on our Facebook Live here as well on Malaysiakini, so feel free to actually type in your comments. We'll be able to see them. Now we have a few people also joining us on Zoom, and there are already some questions, so that's really exciting. We will get to your questions towards the end of the event, but first off, we have some already settled questions available for our panelists. My first question is right to Zen. Zen, can you tell us, why are intercompany transactions being scrutinized?
All right, now, just like how I explained earlier, I said, even if you control all your companies in a group of companies, you can't actually just simply price them like too high or too low. And that's the reason why, in the Revenue Board would actually scrutinize the interrelated company transactions to ensure that your pricing is actually at arm's length, is at arm's length price, is at market price. Now, one of the reasons you may ask, why do they want me to, sell or purchase, at the arm's length price, at the market price? After all, it's my own companies. Now, the big reason here is that because different entities would sometimes have different tax rates, or certain companies would have tax advantage over the other. Say one company has tax incentive, having some exemption onto their income, whereas the other one doesn't have that. So when you have transactions between your related company, and if you could price your transactions freely, according to what you want, you could actually take advantage of shifting your profit from one company to another company and take advantage of either the lower tax rate or due to there is a certain tax incentive enjoyed by another company, and then you're actually playing around with paying less tax. So that is actually not supposed to be done. Yeah, so the reason why the Inland Revenue Board says, well, we have to always transact at arm's length prices, well, that is only the fair price. Well, even though you have certain tax advantage, or even if your tax rate is lower, you should not take advantage of that, and price your transaction too high or too low just to take advantage of that difference, because that is not supposed to be done. Well, be it international transactions or local transactions, like what Haika was saying, all these will be scrutinized, because the whole thing is you cannot take advantage of this tax advantage by pricing it differently. So that is why it is scrutinized.
Very, it's quite logical. It definitely makes sense. Thank you for that. Now, my next question is to Dr. Esther. How does transfer pricing affect corporate taxes? Like, from the government's perspective, what is the purpose of tax pricing documentation?
Thank you, Amanda. I think Zen has covered partly the answer to that question. So when an interrelated transaction, the company transaction is the control transaction, the price will definitely affect the profit that will be recorded by the company. And when there is the advantage of certain companies like having incentives, like Zen has mentioned just now, a company that is involved in the interrelated party transactions is at a loss, for instance, continual losses, it will affect the profit that will be recorded, and hence the total amount of tax, the incidence of tax will be altered. So that will be a concern by the Inland Revenue Board. We want a level playing field. Everybody should be paying the right amount of tax. We want the culture of compliance by all companies, including companies which transact with its related party. So the price that is involved in the transfer price should reflect the market price. So that is the purpose that is the incident of doing all this transfer price, which does not reflect the market forces. So for us, we would like this to be scrutinized and to put the amount to the correct arm's length. So did you also ask me about the transfer pricing documentation just now, Amanda?
Yes, what's the purpose of it?
The purpose of the transfer pricing then, when a company is going to do a transaction, interrelated company transactions, control transactions, a transfer pricing documentation is needed for them to be prepared. There is a requirement under the law for a contemporaneous documentation to be prepared as they are implementing this or developing this kind of transactions. But for companies, for SMEs, usually the requirement is less burdensome, because we want them to prepare just the not a very comprehensive documentation, but they need to provide us their pricing policies, so that at the time when this documentation is necessary for us, it's very important for us to evaluate the risk that is involved in the transaction, whether there is a possibility that the pricing is not correct at arm's length. So at the time when we initiate an audit, we will be referring to this documentation, and it is actually very helpful for the taxpayer themselves, because if the documentation can show that the pricing is fair, it reflects the market price, arm's length, then we probably could decide that, look here, there's no need for us to audit this company. So it is actually mutually beneficial for the taxpayer as well as, of course, for the land revenue. So we will be given the opportunity to evaluate at the onset of our risk assessment.
All right. Well, thank you so much, Dr. Esther. That was a very thorough answer. And as you were talking, actually, we had quite a few questions popped up from the bottom. I don't know if you're able to see. We've got quite a few questions from Zoom. So once again, we'll address that later. But ladies, gents, keep your questions coming. We are more than happy to answer them later. And of course, Haikal, can you tell me, what are the crucial preparations in your experience for transfer pricing documentations?
Thank you, Amanda, for the question. I think the first thing that when we are discussing about preparation of transfer pricing documentation, is you need to realize whether that transaction that you undertake fall under the scope of controlled transaction or those transactions that needs to be documented, because in the Income Tax Act, it does specify that the transaction needs to be between companies that are above 20% share capital shareholding plus a few other requirements. If they meet that 20% plus a few other checklists, then that transaction needs to be documented. That's one. And then extending from what Dr. Esther mentioned, from the transfer pricing guideline, it also provides option for SMEs or companies that are below a certain threshold. They can also prepare a more simplified version of transfer pricing documentation. Unfortunately, you still need to prepare that documentation, whether it is a RM1 transaction or not, because that's what the law says. But there is a simplified version that allows you, that takes off some of those compliance burdensome. You can refer that to the guideline itself. Generally, you need to have gross income revenue above 25 million ringgit. Your related party transaction is either 15 million, 15 million and above. For normal transaction, it's 50 million if it's financial assistance. But if you're above that threshold, you need to prepare a full-blown documentation. But if you are below that transaction, that threshold, you can prepare a more simplified version, as what Dr. Esther mentioned. And another thing that we need to be aware of is when to prepare that documentation. Transfer pricing documentation does not need to be submitted to the IRB at the point of completion. It just needs to be completed contemporaneously. IRB can ask them when they need to ask them. And when they do ask them, you need to provide them within 14 days. This is based on the latest guideline. And honestly speaking, from my experience, 14 days, if you're starting to do your transfer pricing documentation in 14 days, you won't be able to make it. That's my personal opinion and my experience out of it. So make sure your timing in preparation of that documentation is contemporaneous and within that timeline, because there are penalties if you fail to submit that documentation in time. I won't take much time. I'll give it back to you, Amanda.
Hey, that's fantastic. I loved your answer as well, and I love the tips that you've given. For those of you watching on Zoom, thank you once again. More and more questions coming in. So I think this second episode, we've got a lot more questions than we did in the first, so we're going to be answering them later. All right, back to you, Zen. What are some tips and tricks to better manage the intricacies around transfer pricing?
Now, all right. See, the whole concept of transfer pricing is to ensure that the transaction prices between your related parties is at arm's length, is at market price. So how do we justify that? That is always the big question. How do we justify that? Through transfer pricing documentation. Exactly. So if you have prepared a transfer pricing documentation, that transfer pricing documentation is like a report. It's like a report to explain, to analyze what kind of related party transactions that you have with your related companies, and how do you justify that these prices are actually at arm's length price? What is your pricing policy? How do you set your pricing policy? You know, all these can be justified with the report, because in the report itself, we'll also do something called benchmarking, which is to benchmark against the market price in the market, in the same industry, in the market, what kind of prices are actually people charging, to an independent party. So having a transfer pricing documentation would be able to save you a lot of costs, because in the event that the Inland Revenue Board comes, audit on you, check whether the prices are actually at arm's length price or not, that is the report that is going to prove or to justify that all my prices are according to arm's length price, because I've done all my research, I've done my benchmarking, I have set my pricing policy right, and all the justifications and rationales, they are all in the report. So tips and tricks, well, there's no shortcut. I would say there's no shortcut to this. You just have to prepare a good transfer pricing documentation to prove all these prices. All your related party transactions are actually dealt at arm's length price. So I would say no shortcut on tips and tricks, but this is what you need to do if you have related party transactions.
All right, thank you, Zen. Now, Dr. Esther, can you tell us, should SME and startups care about transfer pricing, or do you think it kind of only applies to big companies?
Thank you, Amanda. Well, today we are concentrating on helping SMEs, so my answer will be concentrated to SME as well. Definitely, our focus on multinational is even larger because of the level of tax at stake. But for all companies, basically, the Inland Revenue Board is actually very interested in all related party transactions, which is the control transactions. So to say that should SME or startup should be concerned, well, the answer is, since we are concerned with all companies, they should also be concerned as long as they fall into the category which Haikal has kindly mentioned just now, the requirement to prepare the transfer pricing documentation for companies with gross income more than 25 million, with related party transaction of 15 million, and regardless of this, if there is any financial assistance involved, I'm not talking about the financial institutions, but for these companies where it involves financial assistance, like giving out loans, if it is more than 50 million, they are also required to prepare the contemporaneous documentation. So as long as we have talked about why we are the transfer pricing documentation is needed, it applies to all companies. So my advice is please prepare the documentation, although like Haikal said, you are not requested to submit it as you prepare it, or even when you file your returns, you don't really need to submit it. But when we do perform an audit and we give you 14 days to submit it, you probably could not prepare those documents in time. So it is something which you should be preparing. The SMEs should be preparing at the time when they are developing those transactions. So we are not talking about 14 days to prepare, but it is actually 14 days to submit. And for your information as well, since 2014, we have actually indicated in the written form for them to check the box whether they have prepared the documentation. So they should, everyone should be very aware of the requirement of the law.
All right, thank you, Dr. Esther. And now my next question, Haikal, what are the common transfer pricing mistakes that maybe you have actually made, or you know of other SMEs that have made that?
I think Zan touched a little bit about this in the first question. So maybe I'll take it from the perspective of SME, because that's where the majority of our audience is. So when you talk about SME, maybe they don't view themselves as a separate entity. They see themselves as a group. They don't see or structure themselves as a legal entity. Well, yeah, you need to register legally separate entity, but in terms of day-to-day business, it's just practical. If I have a set resources, I'm just going to move them around however I please, because it's just business sense. it's cost saving. And if I have someone here locally in Malaysia who can help do some accounting or support service for those companies in Singapore, which I have another business there, I will just ask someone in Malaysia to do it. I would not view it as Singapore as a separate entity. I would not view it as Malaysia in separate entity. And what happened there is that the Malaysia entity or the Malaysia business never charged the Singaporean business. So in a way, it's an undercharging, it's under-reporting of income for the Malaysia entity. The logic behind that is that those Singaporean entity, if they have needed that services, they would have gotten outside, or they would have to pay for it. And that's what transfer pricing principle is. That is what the arm's length principle is, to transact as if you are a third party. So when someone in Malaysia, regardless they are within that same group, provide some sort of service to someone in Singapore, or even cross entity, even if you are in Malaysia, but it's a separate entity, you have company A, company B in Malaysia. If someone in company A helping company B, you should be charging that. And I see that happening in SME where they don't charge because it's slip out of their mind. When you talk about SME, resources are tight. We just want the business to grow. I want my people to run. I want business to happen. I don't really give thought to what's the impact of company A, company B. I have someone in A who can do work for B, I'll just ask someone in A to do work for B. But because they are under my own umbrella, why do I need to charge? Which is what Zen mentioned. Unfortunately, that is not the case for transfer pricing. You still need to charge. And that is a case of undercharging or not charging at all in this case. So that's one of the common mistakes that I see. The other one would be giving interest-free loan. Again, this is coming from the perspective of SME viewing themselves as a group. That's my subsidiary. Company A is my subsidiary. Company B is my subsidiary. Why should I be charging my interest between A and B? It's just the same. It's me. It's still one group. So that's also another area that I commonly see between, well, not just SME, even for large multinational as well, to a certain extent, interest-free loan. So generally, interest-free loan is not encouraged, and it may not conform to that in arm's length principle. So those two are the common mistakes that I see.
All right, thank you very much, Haikal. That was very, very informative. Now, Zen, here's a little bit of a chance for you to give a bit of a promo, if you will. Can you tell people why should they consider YYC for help when managing TP risk?
All right, thanks Amanda for giving me the opportunity to promote YYC a bit. Well, I must say that first of all, you see, YYC has been in the tax industry for we are turning 47 years old this year. That means we have more than 46 years of experience. We're turning 47. So we know very well, all the practices of SMEs. We know the SMEs very well. And I just like what Haikal was saying, many SMEs still think that transfer pricing is only applicable when you are a big company, when you're an MNCs, MNE, or when you have like multiple international transactions with your related parties outside Malaysia. But that's not the case anymore. Yeah, that's not the case. Even if you have domestic transactions with your related party transactions, even though you are small, even though you're not a big corporation, you're only an SME, but transfer pricing rules still apply. Yeah. So and when it comes to transfer pricing documentation, like I mentioned, which is the very important thing that you should do, to manage your transfer pricing, that documentation alone, I must tell you, it's not cheap. I must say it's not cheap. Well, it is actually a cost to a lot of SMEs, like what I have seen in the chat, in the questions just now that participants have been posting. They are saying, this cost is going to be very high. It's going to be a burden to the SMEs. So why YYC? Now, because we understand SMEs very well, now we want to make things affordable to the SMEs. Now, I'm not saying that other firms are charging like exorbitant price, and YYC is charging like really, really low. And we're not saying that, but we are trying our very best to make it very affordable. Because we understand, how SMEs deal, with all transactions. We know how to comply to the transfer pricing guideline, ensure that the TP guideline is adhered to, And at the same time, do it at a minimal cost to the SME so that they comply, they don't violate the rules, and they don't have to pay a lot of money to comply to all this. So I would say, YYC really knows what SME is doing. We know what they want, and we are really there to help all the SMEs to prepare a good quality transfer pricing documentation at an affordable price. That's what I probably want to promote. Back to you, Amanda.
Thank you so much, Zen. In a nutshell, basically cost and the experience of close to 50 years. Fantastic. Thank you, Zen. And Dr. Esther. So this is those are actually your final questions from me, Zen. And for Dr. Esther, this is also your final question from me. What are the procedures of applying advanced pricing arrangements, APA?
Thank you, Amanda. APA is actually an arrangement which we offer to mostly multinationals, companies, because it involves cross-border transactions, and its turnover is more than 100 million, and at least 50% of the transaction is related party transactions. So in terms of SME, I'm not sure whether this will really apply, but if they are cross-border transactions, they can approach us. They can ask for a pre-filing meeting. Before the pre-filing meeting, they can also have a discussion with us to evaluate whether the cases involved, the transactions involved, is suitable for APA. And after the pre-filing and having all the transfer pricing documentation for us to evaluate, they can then proceed to apply for formal application of the advanced pricing arrangement. This is actually to ensure that the arm's length transactions is acceptable for the purpose of transfer pricing eventually. And the procedure is for us to evaluate all the conditions and all the pricing that they have set for those transactions. So approaches for APA if there is transactions that may require advanced pricing arrangement. But of course, there is a fee for this because it's quite a resource intensive. That is why currently, as I mentioned just now, the threshold is quite high because we need to make sure that the resources is utilized at the best possible ways. So, and I hope YYC just now was mentioning about costs on transfer pricing for SMEs. So I do like to take this opportunity as well that I'm not sure how much is the cost out there, but I think services for transfer pricing advice is free at the Land Revenue Board. Yeah, you can always also contact us if we can help in any way. Definitely our services probably is different from the tax fraternity out there, but we are also approachable. We don't want to disassociate ourselves with the SMEs for help. Thank you.
Okay. Nice one, Dr. Esther. Very, very good. A good way to actually tell them that, hey, we're also approachable. Fantastic. Now, Haikal, my final question to you. What are some of the key benefits in your experience of APA in managing TP?
So Dr. Esther was mentioning that there's a certain threshold. So I know right here we're talking mainly about SME, but we never know. We might be staring at the next unicorn. So you never know. This may come and applies to you. So in the first place, for me, APA, the main benefit of it is its certainty. Because with APA, you can set a timeline. You deal with APA before you do the transaction. You come to the IRB, you discuss about your transaction, and you try to fix it either 3 to 5 years. And for that period of 3 to 5 years, you can have that certainty that if my transaction were at this margin, it's acceptable. And all this would have been discussed before signing of the APA. And that's, to me, that's the main benefit out of it. In business, you try to make things as certain as possible. You don't want, especially in the times of COVID, you realize I need to get things where I can get a certain level of confidence, certain level of certainty is always welcome. So that's, to me, is the main benefit of APA. You know what's the treatment will be like for the next 3-5 years. And when that 3-5 year lapse, you can again approach Dr. Esther to discuss further on the APA and consider that as an asset. If you ask me, I'll pass it back then.
All right, thank you very much, Heiko. Now let's actually get straight into our poll results. We only have 20 minutes left, but speakers, I want to tell you that we have over 20 questions. So let's have a quick discussion on our poll results before we get into the questions from everyone in the audience. Okay, so this is our poll results. Oh, fantastic. People think that it is very, very important. I'm actually really happy with that. Are you guys happy with this, with the answer?
Yeah, I think I'm really happy to see that everyone thinks that is very important. But if you look at it, there's still someone who is asking, what is transfer pricing? You know, that means the awareness of transfer pricing is still not, fully out there. There's still people saying, what is transfer pricing all about? So yeah, I think we really need Dr. Esther, to do probably more awareness, on this part.
Yeah, but 9% is not bad though. We have a big majority of 77% and also the 19 that say it's kind of important and some say it's very, very important. Right? Okay, fantastic. Thank you very much for that poll. Zen, I actually really love your polls and I am looking forward for next week or next 2 weeks and see what polls you come up with because I think I always have a funny answer to it that's always not the top pick. But that's okay. Now I'm going to get right into our Q&A. To those of you watching, we might not be able to answer all of the questions. We're very happy with your questions, but don't worry. The Malaysiakini team will actually get in touch with you and they will also point you to the right direction. All right, our first question from Andy Tan. Is it true that transfer pricing policy is more important in the past 20 plus years because some companies have taken advantage of the leniency for favorable tax planning? Dr. Esther, maybe you can answer that. What do you think? That's a bit of a controversial question, maybe, but just a little bit.
Well,
all right.
Of course, this is part of what we have seen when we do audit work. And that is why we emphasize on the need to prepare the transfer pricing contemporaneous documentation so that we want them to take note of the transfer pricing requirement as an important subject which they should pay attention when developing those kind of transactions. So we have got these guidelines since 2009. We have made it a requirement for them to prepare this transfer pricing documentation, and we hope that by having this requirement and of course the recent changes in law requiring them to prepare, and there is also this new provision of penalties and surcharge for adjustments, transfer pricing adjustment, although it may not result in additional tax because of incentive or loss, but we want the culture of compliance to be inculcated into each and every one of us, including the SMEs. So I think the answer is it is something which is happening. So I hope with the awareness that we are actually looking into all aspect of compliance, they should also make an effort to be compliant as well.
Maybe I can add on a little bit from Dr.
Yes,
Esther.
please.
So from my view of it, it's also a learning curve. It started off the provision for the section for the transfer pricing came in 2009, and then the guideline came out, and then you have a revised guideline. So it's a learning curve, not just from the taxpayer, but also from the authority as well. And transfer pricing, it's not just Malaysia specific that's learning about it. It's globally. We have the base erosion profit shifting initiative that is being developed globally, and we heard the news about the G7, the agreement for global minimum tax. All those in a way relates to transfer pricing. People are becoming aware about the tax payment and the impact on society. So transfer pricing is part and parcel of that, and that's a learning curve. And when you first start off, there's many things you don't know. As you learn, people will impose more new things just to reflect. You should be knowing about this. It has been around for much longer, then you should be aware about this. So in a way, it is reflective of the learning curve that we have locally in Malaysia as well.
Okay, thank you, Haikal. Now I have just a simple question, this one. Is there a sample of transfer pricing document that we are able to download from a website? Can anyone answer? Oh no, Zen is smiling. Does that mean no?
Well,
Haizal too.
if I were to answer this, I would say, well, if there is a sample to be downloaded, then practitioners will be, out of place. We will lose our business. Well, I'm that's just joking. Well, as far as I know, we are not able to download a sample because you see, a transfer pricing documentation differs between companies, but there is a transfer pricing guideline available for download, and that is published by the Inland Revenue Board. I would say, instead of getting a sample, why don't go to the Inland Revenue Board's website, download a copy of the transfer pricing guidelines, which is updated, and in the guideline, it tells you what are the things that you're supposed to have in your transfer pricing documentation. Follow the guideline, follow whatever that is needed, and well, I'm sure if you follow the guideline, that transfer pricing documentation will be, a documentation that will be acceptable by the Inland Revenue Board. So instead of looking for a sample, look for the guideline, which is totally downloadable from the Inland Revenue Board's website.
All right, thank you, Zen. Okay, now I will not ask this question because it's similar. Let's go on to my next question. Hold on, there's quite a lot, so I'm actually wanting to find a particular one. Okay, what if a company is a monopoly company? How do you make sure a company like that goes according to market price?
So maybe I can address that question from experience. So from transfer pricing, there's something we call benchmarking. And the benchmarking process, there's different methodology you can apply to assess that arm's length, whether that company is compliant to that arm's length. And yes, the guideline, the Malaysian transfer pricing guideline, or even the OECD guideline, they recognize you probably would not find something that's 100% the same, but they try to attempt to simulate something near the same. So it's agreeable when you do the benchmarking. One of the common benchmarking process is when you look at the different company out there, what are their margins looking like, and then you're comparing to what your margin is like. Those companies will not be 100% the same as yours, but at the very least, they're in the same industry, or they are doing the same function, manufacturing company within a specific industry. That, in a way, is as close as possible. And I think Dr. Esther maybe can input on it or correct me if I'm wrong here. The IRB isn't looking for 100% match. They're trying to something similar. So even whether you are just the only person who's doing it in the world, or you're a monopoly in an economy, there is a way to do that benchmark. We're not looking for 100%. We're looking something similar. Maybe Dr. Esther, anything to add on?
Yeah, that is very right, Haikal. And actually, in general, our expectation for SME is not as high as probably the multinationals, where they have to perform those kind of benchmarking and the transfer pricing methods and all those functional and risk, the FAR analysis. But for SMEs, probably involve more in domestic trans. We actually can also accept things like price lists of their competitor or price list of the same industry. So it's not to actually worry too much on the complexity of the documentation. As I've said earlier, we are very approachable, and we have received a lot of inquiries. We have a dedicated email address where they can actually reach us. So they could probably sleep better and not worry too much about the complex requirement of the transfer pricing documentation. So, for instance, financial assistance, we could also accept what is the average bank rates, for instance. So it's something which is not too difficult actually for the SME to provide to us.
All right, thank you, Dr. Esther. Dr. Esther, we have a question directed at you. And the question is, if the company indicated that there is no TPD available in its Form C 2018 at the time they submit the form, and they only prepared the TPD after the submission, will there be any penalty?
Okay, the requirement now is you should submit it within 14 days when we request for it. So if you are lucky, you have prepared it by then, and when we request you to submit and you are able to submit a complete transfer pricing documentation, then you are actually okay with the law. There's no penalty to be imposed. So the answer is don't take the risk. You wouldn't know when we actually pick up your case for audit, and we may need the documents when you're not ready. So that is why the contemporaneous documentation requirement is necessary, so that you should prepare it at the time when you were developing that transactions. So
yep. Thank you, Dr.
Don't
Esther.
take the risk. Yes.
Don't take the risk, guys. This is another question. Specifically, the person has written, select yes or no. Okay, so the question is for SME companies who do not meet the TP requirement but has prepared simplified TP documents, how should they fill up the column TP in the Form C? Do they select yes or no? Dr. Esther, Zen? Okay, great.
Oh, yeah, maybe I can answer to that. Well,
okay, that'll be great.
If the SME has not met the TP requirement, but prepared the simplified TP documentation, I think he's trying to say limited scope of the TP documentation. Well, when they select and when they fill out the column in the Form C, well, you do actually have TP documentation. Even though that's not a full TP documentation, even that's just a limited TP documentation, well, you still have the TP documentation with you. So, well, why? I mean, you should just put yes. Well, but I think most of the people would always have this dilemma, especially, my clients, my SME clients, they know they need to have TP documentation, but they know they do not have the TP documentation. So they will be in a dilemma of whether I should put yes or no. Because if I put yes, what if the Inland Revenue Board come and ask me for that documentation when I do not have one? I put yes, and that's also telling lie. But if I put no, where I actually have related party transactions, does that violate the law right away? No. So I'm glad to hear, from Dr. Esther saying that, well, if you really do not have the TP documentation, you can just put no. But in the event, if they come in and check, and if you can present the TP documentation within 14 days, there will still be no penalty. I mean, I'm glad to hear from Dr. Esther saying that, giving the assurance that you have to just be honest, saying that if you do not have one, just put no. But if the Inland Revenue Board comes and do an audit, if you can present it within 14 days, there will be no penalty. That's really good.
Thank you, Zen. Okay, our next question is, if a holding company incorporated in Japan gives interest-free loan to a subsidiary in Malaysia, what is the transfer pricing implication to the subsidiary in Malaysia? Anyone? Open question.
Maybe I can take that.
Okay,
So
Haikal.
in terms of implication itself, it's probably not a negative or adverse implication locally in Malaysia, but it would be a negative implication in Japan, for the being that the Japan holding company would have needed to recognize additional income because it's an interest-free loan. The Japanese entity should have gotten more returns from their interest itself. But from the Malaysian's perspective, one, you need to be aware of the law, the new guidelines, as the new insertion to the Income Tax Act. It could be just a matter of you're not preparing transfer pricing documentation, you could hit up to 100,000 penalty. So even though it doesn't give a negative position in terms of your in terms of your tax profile, but just not having that transfer pricing documentation in the first place could hit you with a penalty. I think that's a summary of what I can think of right away on the impact of that.
Yeah, I can also add a bit on that. Probably eventually the tax authority in Japan may also pick up the case for audit, and there will be some adjustment that will be done in Japan. So it could be, add to complexity later on, where tax authority may be approached for mutual agreement procedures for us to do an adjustment. So it can go a bit complicated, with probably the taxpayer needing a tax agent service again to help up with the mutual agreement procedure cases.
All right, understood. Now for our tax guru, we have a question for you. What if a company already has a chargeable income? If surcharge is imposed, won't it be a double penalty, which is income tax and surcharge?
Now, the surcharge is actually imposed whenever there is a transfer pricing adjustment made by the Inland Revenue Board. That's according to the new subsection 140A(3)(c), if I remember properly. So that surcharge is actually imposed irregardless whether will it cause additional tax payable or not when adjustment is being made. But of course, correct me if I'm wrong, Dr. Esther, as per what we have heard, from various forums, with the Inland Revenue Board, we were told that in the event if there's an adjustment made and if the surcharge has been imposed due to the TP audit, and if that causes additional tax payable, then the Inland Revenue Board would impose the surcharge, but not the other penalty for underpayment of tax. I think that was what we were told. So I hope that still stands. If that is the case, then, the double tax or double penalty would not, happen, because you only pay the surcharge and there will not be any penalty for underpayment of tax. Yeah.
All right.
Yeah, I'd like to confirm that, yes.
Sure,
Yeah,
yes.
mutually exclusive, yes.
Okay, fantastic. Now, guys, we only have time for one question, as the time is already 3:58. We will be going a little over an hour. Thank you once again, guys, for all your questions. And do remember, if we were not able to answer them, the team, Malaysiakini team, will actually reach out to you and point you in the right direction. Now, this is a quick question. How frequent should we update our transfer pricing documentation? And this is also for companies who do not have a lot to update to begin with.
Probably I can start. Yeah. Okay, if there are major changes to the pricing policy, then they should revise it. At least before they file in the tax return, they should review the transfer pricing documentation.
So does it have to be the latest version if they don't have a lot of business changes?
Well, like I said, if there's no major changes to the pricing policy, then there's no need to revise the documentation, as it reflects the true, it is still valid.
Yeah.
But if there are changes to the pricing policy and it affects the documentation, then it should be revised.
All right, so that's a simple question, and basically, if your company has gone through lots of changes, that definitely needs to be revised. Because we actually have 3 people asking that, so I was trying to compile them into one, and you answered that perfectly. All right, we are coming to the end of our second episode. Dr. Esther, can you please tell me, what do you think of today? Did you like the questions, the interaction with the audience? Tell me, what do you think about today?
Yeah, once again, thank you for inviting me and of course the Inland Revenue Board to this session. I think this is really a very useful session, and it does provide the Inland Revenue Board of Malaysia the insight of how SME is looking at the requirement of the law on transfer pricing documentation. So I would like to let them know that we are really approachable. We have a dedicated email address, and if they do have any questions, they can always send these questions to our lhdn_tp@hasil.gov.my. Of course, I'm not trying to take away YYC Group professional advice, but if you do have any questions which you like us to help you, we are very approachable. It can be sent to us as well, and we'll try to help as much as possible.
All right, thank you, Dr. Esther. And how about you, Haikal? What do you think of today's session?
I think based on the engagement and even the poll result, I think there is a higher level of awareness, at least much higher than what I was expecting. And that's good, and that would set the SME in a better position. I just feel it's sad or unfortunate that just because they're not aware of it, then they would get penalized, because that's the law. Just because you're not aware doesn't mean you won't be able to penalize, we won't get penalized of it. But then this level of awareness that I'm seeing is much better, and it helps them. As a takeaway, I just wanted to say thanks to Malaysiakini and YYC for the opportunity to be part of this discussion, and I'm always happy even to discuss with the other SMEs. I'm not a tax agent, but I have views, approach, I have experience of what I did previously. There won't be any charge, and don't worry about it, but I won't be able to appropriately advise you as a tax agent. If you need that, you would have to go to Zen or even to Dr. Esther. But I myself also have some experience with transfer pricing, and always happy to have that discussion as well. You can find me on LinkedIn, no problem at all.
Thank you, Haizal. And of course, finally, Zen, tell us your key takeaway from today. Are you happy with the poll results? Do you love the Q&As? We have more coming in right now, actually, even though I've ended the session. Tell me what you think about today.
Now, obviously, I feel really happy to see that most participants think that, transfer pricing is very important, even though there's still some of them who say, what is transfer pricing? But, well, it's good to see that majority of the participants think that, transfer pricing is very important. And of course, to all the SMEs out there, I must tell you, SMEs, do not be afraid. I know transfer pricing rules, are making you having headache maybe right now, thinking that how do I comply? These things are so complicated. Do not be afraid. Just like what Dr. Esther has said, they are very approachable. They're very approachable. You can always, go to the LHDN, and to ask further. And of course, if you need YYC to assist you, to manage your transfer pricing risk, to prepare your transfer pricing documentation, do contact us, I think, if you look at the chat right now, there's a link for you to just click, to register interest, to find out more how YYC could help you. So, do that if you really think you need help from us. All right, so take that action.
Fantastic. Now, thank you all to our three speakers for this extremely insightful discussion. To all of you who are watching, and I've got even more questions still coming in. Once again, this is the end of our session. For those of you whose questions have not been answered, the Malaysiakini team will actually reach out to you, as I've mentioned before. So you can still ask your questions now before we end, but you can also move on to Facebook Live, type in your questions there. Once again, Malaysiakini will reach out to you. Now, ladies and gentlemen, to all, see you on the third and last episode of Tax Made Easy, which will be live 2 weeks from now on the 16th of July. Now, due to a lot of these unanswered questions, we may actually be talking about corporate tax audit and investigation. So till then, take care, stay safe, and goodbye.
YYC Group was established in 1974, founded by Mr. Yapsiong Fat and his wife. Initially, our office was located at Pudu, Kuala Lumpur. In early 2018, YYC HQ officially relocated to a 5-story building having more than 800 employees. Currently, YYC operates with branches across KL, Selangor, Johor and Penang. In 2019, they have also entered the Singapore market. YYC's business philosophy and excellent performance successfully catch the attention of OCBC Bank to invest and become the strategic partner.
为了把 YYC 推上另外一个高峰，我选择不在手，而是转型。对我来讲，转型就是不断的学习，不断的创新，带更好的元素进来自己的公司，然后把公司做得更好、更强。
YYC Group providing one-stop solution of professional services including accounting, tax, audit, business school, business advisory, etc. Through innovative transformation, we have trained more than 100,000 business owners and widely recognized by entrepreneurs from many industries. Today, YYC has over 20,000 clients.
YYC 不是只是一个会计公司，我们是一个企业医生。Your success is our success.
Yes, you can.